Everyone, welcome back. Today we're looking at Rivian. Rivian adds cheaper dual motor option to the R1T and R1S configurator. I've heard about this, and apparently this could help with cost cutting for Rivian, which is quite essential, especially when you're dealing with electric cars or any sort of automobile. The simple fact is, the automobile business, whether electric car or a combustion engine, it is an extremely capital incentive program. It's the kind of business that requires a lot of capital. It requires a lot of funding, a lot of money, and a lot of good money management skills. Now, we've seen time over time, Tesla's taken their time to create the perfect product, create the perfect car, and reduce the cost by minimizing a lot of the things that they add to their cars. When you look at the first Model S back in 2012 or 2013, the interior was very traditional to other vehicles like a Mercedes or a BMW. Now it's extremely minimal. And a big part of that is cutting costs. A big part of that is taking everything that usually has a button or just anything a little bit old-fashioned and putting it on a display, on a computer screen, and just giving you that computer screen. So they've turned the entire car dashboard into a computer essentially. And for them, it makes sense because that drives down costs. For them, it makes sense because now you have a computer on wheels. FSD runs a lot smoother. When it's a software-focused company, when it's a software-focused vehicle, the things like over-the-air paid upgrades, those can also be shipped out to customers at whichever cost Tesla chooses. It just makes a lot more sense for a long-term business. And this was where the business was going anyway. But I think that Tesla really forced a lot of companies to adapt to it a lot quicker, and Tesla certainly adapted to it a lot quicker. They were ahead for quite a few years in quite a few areas, and now we're seeing companies like Polestar, NIO, Rivian starting to catch up. And I must agree, it's fantastic for business. So just a day after a pre-configured dual motor R1S appeared in Rivian's R1 shop, Rivian has now added the new dual motor and performance dual motor option to its online configurator for new vehicles, letting customers add these options to their custom R1 builds. Up until now, Rivian vehicles have come in a quad motor configuration with one electric motor driving each wheel. While this results in excellent traction, it also adds cost and complexities. In addition, Rivian outsources the production of these motors, which add another layer of cost for the company. And cost is currently a main issue for Rivian and multiple of other electric vehicle manufacturers. And these companies, such as Rivian, they have to deal with this cost issue at a rapid scale. It's easy to build one prototype, 5, 10 prototypes, but building hundreds of vehicles, thousands of vehicles, the same identical vehicles, the added costs, they don't make sense anymore. So if there's a cheaper way to manufacture your vehicles, of course you're going to do it. It makes sense. And I love this direction by Rivian. I love that Rivian uses their own software. I love that Rivian straight away went to a niche audience, the pickup vehicle audience. Americans love pickup trucks. It was a perfect audience to target. Americans love big SUVs. It was a perfect audience to attack. Rivian is doing a lot of things that make sense fundamentally. Companies are looking to go green. Companies are looking for delivery vehicles that can offer high amounts of electric vehicle range and vehicles that could someday, eventually, drive themselves. Rivian added the Rivian delivery vans, which is very interesting because we wonder, will Tesla go into this area at some point? And we think they will, because seeing the rapid development of the Tesla semi-truck, it is clear that Tesla is targeting not just one area of electric vehicles, but perhaps all areas of electric vehicles. They don't just want to produce 1 million, 2 million vehicles a year. 10 million is what they want to achieve. 20 million is what they want to achieve. And currently, it doesn't make sense if they try to do this with just 2 or 3 vehicles. They need more. They need vans like Mercedes. They need semi-trucks. They like Volvo and Mercedes. They need more vehicles. They need delivery vans. The more they can offer, the more they can sell. And Tesla tends to be the best all round in terms of battery, software, just almost everything to do with an electric car. Almost, I'll admit. But the rest of the market is catching up. Obviously, Lucid right now has the longest range electric car on the market. So other companies can catch up. Other companies do have the capabilities to surpass Tesla in what they're doing. But Tesla is efficient at creating a large amount of vehicles at a great cost, all while using a bunch of technology that they've taken a long time to develop by themselves in house. They develop a lot of their technologies in house, which is really unique for any given company. Many companies don't really do this, but Tesla has taken up on themselves to be quite ambitious and do this. It's one of the fundamental reasons why I really like Tesla. And if Rivian tends to go in a similar approach, I have to support that. So in order to address this issue, this huge issue that Rivian is facing when it comes to costs, making other developers, making other manufacturers manufacture your car parts, it's costing too much. Rivian has been working on producing its own Enduro drive unit. Its first dual motor truck with these Enduro drive units rolled off the line in May, and now production volumes have scaled up enough that Rivian is starting to offer these dual motor units to customers. And thankfully, Rivian has posted on their Twitter of this exact thing. And they've added a statement to their tweet, obviously. And I quote, "With production volumes increasing at the Normal, Illinois plant, we've added performance dual motor and dual motor R1T to our online configurator and invited more order holders to configure. We're looking forward to seeing more Rivian vehicles of all kinds out on the road." I really like Rivian. I really like the way they do things. And the fact that they're a company that's starting in the United States, it will be so much easier for them to now branch out into other areas such as Europe. In fact, I believe they're already delivering their delivery vehicles, the delivery vans in some places in Europe, which is really incredible to see. Of course, it's really good to see. So I'm really excited for what Rivian is doing. I really understand what they're trying to accomplish. I can see how this will help them in many ways. So just a few days ago, these trucks were appearing on Rivian's website in the vehicle shop auction. This isn't a public section of the site. It's an invite-only area where pre-order holders can see inventory vehicles that can be picked up without having to wait as long as their custom builds. That's actually really amazing. I like that. I don't know if other manufacturers do this, but they should really do this or consider doing this. Now, these configurations have been added to the public configurator, so interesting customers can look at different configurations, and order holders can lock in the cheaper dual motor options. So the base model R1T dual motor now costs $73,000, and the R1S starts at $78,000 with the smallest standard battery pack. These prices are $8,000 down from the base quad model price, quite a big chunk of saving, made even larger by the increased availability of tax credit. Crucially, these numbers are both on the $70,000 MSRP cap needed to qualify the US EV tax credit. That's from the Inflation Reduction Act, which means qualifying vehicles buyers can get an additional $3,750 back from the government on either models. So adding the performance dual motor setup, which was shown to the public for the first time last week, will upgrade you from 533 horsepower to 665 horsepower, brings your 0 to 60 time from 4.5 seconds to 3.5 seconds. That's wild. And sets you back 5,000, but you can't add the performance system to a standard battery pack. So the base price of the performance model is $84,000. So that's it, ladies and gents. And as we know, Rivian vehicles aren't necessarily cheap, but I do like that they're making an effort to make them cheaper and to make the company overall more efficient at what they do, which is manufacturing vehicles. So I do hope you've enjoyed this video. The Rivian stocks is doing incredible at the moment. I've got to say, did not expect this turnaround from the Rivian stocks. I don't think anyone did, to be honest. This sort of recovery from stocks is really extraordinary and it's really rare. But fundamentally, it's just really good to see from Rivian, because I think their delivery numbers are looking absolutely good. They're looking to deliver 50,000 plus vehicles this year. I'm quite excited for that. Question is, can they deliver 100,000 next year? And you know, it wouldn't be out of the question. it would not be out of the question because they're becoming more and more efficient. Last year, they delivered 20,000 vehicles. This year, they're looking to more than double that by almost 200%. Yeah, 150% it will be. But still, really incredible. I'm thankful to say I did buy some Rivian shares at a really cheap price. Happy with that investment because now I'm up like over 70% or something like that, if not more. My plan was always to wait until the shares hit rock bottom, which is what I did because I remember when it just came out, I was always thinking to myself, it's way too expensive as a share. I'll just wait until a company is worth around 10 billion in market cap, maybe just less than 15 billion, but 13, 14 billion I could consider buying. But 10 billion was the perfect area to buy. But when this company can deliver 50,000 vehicles a year, I don't see a reason for this company to stay at 10 billion in market cap. They're at 23 billion right now, but I wouldn't really expect them to go back to 10 billion in market cap or anywhere close. I don't think they were officially at 10 billion, but they were quite close. Maybe 11, maybe 11 and a half, maybe 12, but it was quite close and it was good enough for me to buy. I don't expect them to go back to that price necessarily if they're making so much deliveries. 50,000 by the end of this year. That means I can buy this company around 12 billion in market cap, 16 billion in market cap. I'll be more comfortable buying around those price. I'm still watching the price closely. I still wouldn't be fully comfortable buying around this price because I think it's a little bit overvalued. Not overvalued long term, but short term certainly. The question is they can deliver 50,000 this year, but what can they do next year? I want to see consistency. If they can deliver, I don't know, if they can double it once again, if they can deliver 100,000 vehicles next year, this price is definitely justified. But that's it for today. Thank you for watching and I'll see you in our next video. Peace.